Hey everybody, what's up? It's Booksy. Today is October 4th. It's a Wednesday. I'm needing to do a quick update. I did a stream yesterday. I wouldn't say it was like an emergency stream, but kind of. Basically, what I'm following here is a sort of a breakdown pattern that we've seen before, which is like what I call a four top. You can see on the bigger picture here, I'm on the 1 hour. This looks like a 1, 2, 3, 4. That's not super unusual, and it shouldn't be taken as like, well, why didn't you see this before? Well, the main reason is because of this right here. On Friday into Monday, when we went that push up, that secondary push up that I said looked a little bit like a UT, did like a double flush. The only way that was going to work out is if we went ahead and reversed and got that push all the way up back to the top, because I could see this as possibly a continuation up, and this is the high, and then this is the pullback. And we would need to continue to then make higher lows. That's more or less typical for something like this. And then what we would want to see after that is we would want to see it kind of push back up and then move into that SOS range. So I was waiting for that yesterday, and it just didn't happen. Volume stayed really low. It kept diminishing during that whole process, and it just didn't push up. And unfortunately, what that means to me is that this is probably, we say probably, we say possibly, we say it could be. These are just words that mean there's an uncertainty to it. The uncertainty is that you can't be 100% positive until you see certain things happen. But yesterday's price action led me to, unfortunately, a conclusion that I don't like, which is that this is looking more and more and more like it's a failed attempt to break out. So you had the whole upthrust happen Monday, and then you have into Tuesday another one, and then two more on the top of that wedge, and then we're kind of pushing back down. It looks like repeated failed attempts on weaker and weaker volume to try to break out. And so normally what's going to happen from that point is that you're going to go down for liquidity purposes. And that doesn't necessarily mean you're going to hardcore distribute, but it's really important to note that we lost the 2 hour when we were talking about this for quite a while. We were talking about that 2 hour. I'll switch over really quick. We lost that 2 hour support we had. And to me, this looks a lot like a big old hook. And this is typically what we see when we see that cat ear pattern, is we see that kind of push up, and then there's the cat ears, and then you typically will have a sell-off afterwards. This is the most normal distribution pattern that AMC has, and it almost always happens via what looks to us to be a pennant. And we knew this from the beginning. It's not like this is completely unheard of. If you've been following for a while, we've talked about this like a million times, right? So the idea is like, well, why would you have think at all that this would have broken to the upside, right? Because then there has to be a reason that sometimes this doesn't do that. And there is. And during certain bottom sequences, after you make this high and then you make another low, you push back up and you go into the SOS. You succeed. And so instead of getting this kind of typical, we've got the first cat paw and then the second one, and then you've got this flat down, instead of seeing that, what we usually see is you see this kind of push up here, and then you break up into, and this should look familiar to everybody because this is a pretty typical looking setup for us, right? Should remind people of really anything. January, March, whatever, you take your pick, they all pretty much do the same thing. And it has to do with this very final M cross. So this is an M shape right here. As you can see, there's a 1, 2, 3, 4. And what that is doing is it's jumping over that creek. So we needed yesterday to jump over the creek again and make a new high. And we did not. So we should have seen this push up, right, that leads into the SOS here. And instead, what we got was, unfortunately, we got that M really low, right? So it failed to break out, and then we have this really low, tiny M, right? And then it ends up looking like what we call the foretop, which is one that in which it basically looks really flat at the very end, and then it breaks down. So a lot of people are using only breakout models to kind of estimate where it might go. There's breakdown possibility here. We talked about a spring at 699, not out of the question. But the big thing for me is I've been looking at that bottom fractal that had from January that had some pretty nice similarities to it in terms of the price action and also the volume to some degree, and also there's a number of things, but a lot of it has to do with that fractal sequencing, and then being that it broke out, where should it have gone from here? And I really think that the breakout that happened here needed to come low first. And I was really bothered that we didn't fill the gap the first day, and instead we just kind of pumped and then distributed. That bugs me. And it's not that, again, this has to be bad. Like, I'm looking at pre-market right now, it looks like it's going to gap up. I don't necessarily think that matters, because it could just be a retest on this trend, which is that major downtrend. But to me, this is a pretty clear foretop. And unless you get some kind of a really strong reversal today that goes all the way back up to 830, and that has to find support up here and starts pushing resistance, this is not looking good. It's more than likely going to come back down. And the other comparison I think that people need to be doing is this one right here. This is almost identical in terms of how it sets up, right? Going into the final cat ear here, you get the push up, then you get this double up thrust, down thrust. The up thrust even exceeds the resistance, which is exactly what happened here. It's like the first time that really happens, where you make a higher high all of a sudden, and then you come back up, but you fail on the second attempt to make a higher high, and then it distributes, right? And as soon as this thing comes down and breaks beneath 776, I'm pretty confident at that point it's going to come down fairly low. And I did this on stream yesterday. I think it's pretty accurate, so I'm going to just kind of leave it as it is. But this is what I'm seeing in terms of having the setup kind of fulfill here. I think we're going to see it kind of come down to roughly the same region around 750. There'll be a reaction here. This is like a halfway point on a slide. Then you'll come low, and at this point, this is where things are going to get a bit different, a bit dicey. We're going to have probably a couple downward thrusts beneath the floor here. We should have some kind of an accumulation range. It could be fairly slow, so I made it look very like fast. No guarantees about that. It depends a lot on this early reaction. If this early reaction is really slow, like if it takes a while and comes over here and takes a couple days or whatever it is, I wouldn't necessarily expect this to be fast. So it just depends on this very first reaction. It could be a lot longer winded than this, the way I've drawn it. Best case scenario at that point is we do get a spring. I think it's still possible. In order to get a spring, it would be easy to see. You guys are like, I know this is way in advance. This hasn't even happened yet. What if it does this today? Well, look, if it does this today and it breaks to the top and it goes to 840 and it SOS's, we're good. You're ready to go. You know what I mean? We don't have to question anymore. But I don't think that's what's going to happen. And I'm pretty sure that we're going to come back. We're going to chop through this region right here at 750. Then we're going to drop low for a possible spring. The way that this failed last time is really important. During this sequence, what you need to have happen is after the spring motion, it needs to come up and push resistance. Notice that didn't happen here back in December of 2021. We're just comparing the fractals. But it does happen anytime you're going to break out. Anytime you make that reactive move down, we've done this like several times in the last couple weeks, the next move up needs to push resistance and then find support higher. And for a spring, after that accumulation, no matter how long it takes, it needs to push its way back up to the upside and then come back down and make a new high and then come back down and then make a higher low, preferably on the floor. And at which point you're ready to go and you can push up. the buy-in here would probably be more or less right here, right around the top here, maybe 750s, okay, after it starts pushing up again. And then you have a very good chance that when you come back up, you're going to basically find where we are now at 8, but you're going to be doing it by crossing that creek. So you're able to cross that creek really low. It's possible, if this takes a really long time, that we may not cross that creek, right, until like way over here or something, mid-October even. And in that case, yeah, you could be crossing it really low and then testing it all over again. But ideally, that's what happens, okay? If it falls today, that's what I would be expecting. Unfortunately, if it fails to make a higher high here, I think what's going to ensue is going to be just your kind of your typical breakdown, where you fail, you come back down, you create a hooking motion underneath the floor. So this would be like the spring does not make a higher high here. It rejects lower, it's weak, and then it creates a distribution and comes down. A 50-50 slide through this area would be pretty violent and would lead you to that original 535 spring quote-unquote area. That has to do with that first slide on the rotation, which I felt was done, but this kind of nonsense makes me question it. So that we had yesterday. So that's it. I'm not going to go into this situation very much. I don't want to get into it too much because this would be a whole nother bottoming range. It's a separate area. And I don't think it would necessarily be a quick drop with a rebound. It could be, but you never know. That's kind of a big question mark. The big things today you're going to want to watch, keeping it brief, is you're going to want to watch 788 to 793. That's where the magic's going to happen today, good or bad. This is the area that I would expect there to be a little bit of I actually drew the pop yesterday. But I thought it would come a little bit lower. So there's a support right here on this trend that comes down pretty low, down to like 780s. And then I think the reactive move back to the upside, this is where you're more than likely going to find a hook, somewhere around 788 to 793. If it breaks back above at any point this trend here and comes back above here, and this is the trend that you can draw by going all the way up to the two most interior points on that downtrend, way back up when we first started dropping. This is really critical because it intersects a lot of other things right here around this $8 mark. So this is going to be the big one, I think. If you can get over this, find support and push to the upside, I'm just going to be waiting to see if it makes a higher high. If it makes a higher high after doing all this stuff down here, it's probably bullish. Can't guarantee that, but it's probably bullish because then you could have it catch and finally find support on the outside of this pendant-like structure. So there's a lot going on today, but most of it's going to be right here. And I honestly think that if it breaks down beneath, makes a new low beneath like 776, it's probably going to go ahead and do the slide. And you're going to see it come pretty low, pretty fast. Okay. All right. I hope you all have a good one. We'll talk to you later.